All right, let's just jump right in. For a long, long time, the story of XRP was kind of written by one group, right? But that story, it's being completely torn up and rewritten as we speak. The market is going through this huge shift, and the rule book that we all thought we knew, it's changing. So, welcome to the new game. So, this really brings us to the big question, probably the one that's on your mind too. With all the history, the community, all the ups and downs, is XRP still just a retail coin? Is it still playing in the same league it's been in for, what, the last decade? Well, the answer to that is a pretty clear and decisive no. Not anymore. The playground that was once dominated by retail traders, it's now become a massive target for the biggest players in finance. I mean, the gates have been thrown wide open, and we are officially in a brand new institutional era for XRP. Okay, the ETF catalyst. How the floodgates opened. So you're probably wondering, how did all this happen so fast? Because let's be real, this change wasn't gradual. It was kicked off by one single powerful thing that just completely changed the game. The arrival of spot exchange-traded funds, ETFs. This is what really opened the floodgates. All right, so for anyone who needs a quick refresher, a spot ETF is, well, it's a total game changer. It's a regulated mainstream investment product that you can buy and sell right on the stock market. What it does is it lets these massive institutions, I'm talking pension funds, huge asset managers, get exposure to XRP without all the headaches of actually holding the coins, dealing with custody or private keys. It's basically the ultimate bridge from old school finance straight into the world of crypto. And wow, this timeline really just shows you how fast the whole story changed. I mean, for years, the market was just stuck in this regulatory fog, right? Total uncertainty. Then, bam, late 2025, the first spot ETFs launch. By March 2026, XRP gets officially classified as a digital commodity, which is a huge deal. And then, just 1 month after that, the money starts pouring in, proving that this institutional demand was absolutely real. Next up, following the money, the proof in the numbers. Look, talk is cheap, right? But money talks. So let's follow the cash and look at the hard data, because this proves this isn't just hype. It's a real fundamental shift, and it's backed by a ton of investment. Okay, let's just start with the headline number, the big one, $1.53 billion. That's how much was in these XRP ETFs by March 2026. And get this, that's just a few months after they went live. Seriously, let that number sink in for a second. That's not just a little vote of confidence, it's a massive, massive injection of new money into the entire ecosystem. But here's the thing, that billion-dollar number, it wasn't just a one-time splash. What's so interesting here is how consistent it was. All through April, the buying pressure was just relentless. I mean, even in what you'd call a slow week, we're still talking $55 million of new money coming in. And on a high week, that number more than doubles to nearly $120 million. This is that steady, methodical demand we're talking about. And if we zoom in even closer, from the weekly view down to the daily, you see these incredible bursts of buying. The single biggest days saw over $17 million flow in. Let me say that again, in just one day. That's a perfect snapshot of big players seeing an opportunity and just going for it, making these huge decisive moves. But okay, here's where it gets really interesting, kind of a plot twist. You might be thinking this is all institutional money, right? But the data shows something else entirely. Get this, for now, retail investors, people like us, are still the dominant force here, making up a whopping 84% of the inflows. So, and this is the key takeaway, the big money has definitely arrived, but the retail community is still firmly in the driver's seat. All right, Section 3, the retail trader's edge, your new playbook. So, if the institutions are here, but retail is still running the show, what does that actually mean for you? It means the game has totally changed, and your old playbook, it might not work anymore. So let's break down the new edge you have, and, just as important, the new dangers you've got to watch out for. First, let's talk about the good stuff. The opportunities are real. All this institutional cash means deep liquidity. Now, that's not just some fancy term. For you, it means when you hit buy or sell, your order gets filled instantly at a better price. We're talking tighter spreads. Second, you've got a powerful new catalyst. Every single headline about ETF inflows can now kickstart a rally. And finally, there's just more confidence in the market. Having these regulated products out there kind of chills everyone out, reduces fear, and brings in more careful money, which helps create a stronger price floor. But, and this is a big but,
This new playbook also has a whole chapter on risks. And this is where that 84% retail number becomes so important. Because retail sentiment is still steering the ship, the market can get a lot more emotional. A sudden dip in ETF inflows, even a tiny one, could get blown way out of proportion by retail fear, leading to much sharper, faster sell-offs. It also means the market is now totally hypersensitive to headlines. Bad news doesn't just cause a little dip anymore. It can trigger a huge wave of selling, all amplified by that massive retail base. The volatility is basically supercharged now.
Okay, so this all leads us to the final and maybe the most important question. What's next for XRP? Where does all of this actually lead? With these two powerful forces now in the mix, the big institutional money and that supercharged retail sentiment, what do the future price scenarios even look like?
Well, some of the big financial institutions have started to map out a few different paths. So you've got the conservative case. If regulation kind of stalls out, they see the price hanging around 280. Then there's the base case. This one assumes that ETF growth keeps going strong and it puts the target at $8 by the end of 2026. And then you have the long-term view. If we get full regulatory clarity by 2028, some are pointing to a potential path to $12.50.
And this quote really just sums it all up perfectly. This whole thing, it's not just another bull run, it's not some temporary trend. The arrival of these ETFs represents a deep structural change in how the XRP market works. The game really has been changed for good. So with billions of dollars pouring into this new kind of market, this hybrid of retail passion and cold, hard institutional capital, the real question isn't if the future will be different. We know it will be. The question is what that future is going to look like. All the pieces are on the board. So the only question left for you is, which future are you betting on?